While ICOs are still a trend to watch out for your next startup, it is worth to take the time and evaluate if this is the best option and how to best go about it. This and many other important startup questions will be discussed in this talk with our guest, Doug Lyons. Doug is an ICO advisor and investor with over 27 years in risk analysis experience that he is now transferring to the world of ICO. Please welcome Doug Lyons.
All right, so Doug, can you share with us just when did you know that blockchain is the future for you? And what was the aha moment that made you transition into that industry?
So back in 2013, I was doing some brokering of Bitcoin, more as a hobby, just kind of fooling around with it, making a little bit of money. I had an issue with one of the purchasers. The way it was working was they were using Interact e-transfer for payment, and once the payment was confirmed in my bank account, I would make the transfer of the Bitcoin. To make a long story short, once the bank found out about what I was doing, they actually recalled the mortgage on my home. They cordially invited me to not be their client anymore, and they essentially walked me out of the bank with my entire banking history in one arm and the sum deposits in the other. So at that point in time, Bitcoin was no longer a toy or a plaything for me. It became obvious and imperative that there be significant changing in the centralized banking system, and that's when I believe that blockchain was and will be the answer.
Wow, that's an interesting story. So how did it end up?
Well, it ended up I had to open up another bank account with another banking entity, and effectively I had to be quite secretive in terms of what I was doing in the crypto space.
Well, that's interesting because from my research now, it comes out that banks are actually one of the biggest investors in the blockchain technology. So,
absolutely, but 5 years ago that wasn't the case. We had the dark clouds of Silk Road and all those types of things. At that point in time, Bitcoin didn't have a very good reputation. It was believed to be a means to access drugs and weapons and other things.
Well, it still is to some extent, I think. Some people are still into that mind frame about it.
To a certain degree. However, what I would tell you is that based on the community growth that I've observed personally over the last 5 years, I would tell you as it gains adoption, you're starting to see regular people coming into it either as a speculative asset or they're looking at it in terms of what the technology has to offer.
Yes, well, I guess with there's a lot more information about it nowadays, so it's easier for people to get an understanding of what it is. Actually, this summit is all about this, about bringing it to the mainstream and explaining to people that it could be a safe environment if they learn more about it and they introduce themselves to it.
Absolutely. Now, if we could only get rid of the scammers, I think we'd be that much further ahead.
Yeah. Well, before we dive into the ICO startup basics, let's talk a bit about what an ICO is and whether a project should run as an ICO at the first place. What should people have in mind when making such a decision?
Well, I think one of the things first and foremost in terms of ICO success is the blockchain or the use of the blockchain in terms of the technology going to solve a problem? Or is it going to be something that is going to gain some form of mass adoption, market share? Is it something that has the security that people are looking for in that type of environment? In terms of a conventional money raise through crowdfunding or IPO, an ICO is much less expensive than traditional fundraising. But the big thing is that there's literally billions of dollars available investment from those who hold things like Ether and Bitcoin and don't want to convert into fiat because of taxation implications or capital gains implications. So I think when you're making the decision as to whether or not you want to run an ICO, one of the biggest things is that it has to have not only the blockchain incorporated into it, but it has to have significant appeal in terms of branding, marketing, and community involvement.
And of course, the use of the product that you're going to offer, it's a very important as well, if it's going to be adopted at all, and if it's needed at all.
Absolutely. And one of the things we're starting to see now is ICOs coming forward where their only use of the blockchain is actually in their funding, trying to raise funds. To me, that doesn't necessarily meet the criteria in terms of what I would invest in or what I would suggest that others be looking at investing in.
Would you give an example of that?
There's one particular project out there right now where the technology is based on assets, things like gold, silver, so on and so forth. However, it's being done as such where the blockchain is only being used to provide a platform for the funding, for the raise of funds. With that being said, I don't see where the creation of a pool of value is going to come from in terms of from the investor.
So you don't see, what you're saying is that you don't see a value in the product itself?
Well, I see the value in the product itself, but I don't see how utilizing the blockchain for any other reason other than funding or raising funds is sufficient to meet the criteria that I follow in terms of investment.
Okay, well, then can you give us some examples of businesses who already incorporated successfully a blockchain technology into their model, that businesses that attract you as an investor?
Well, certainly fintech is the biggest thing right now. Banking platforms, peer-to-peer exchanges. There's a very large number of exchanges right now that are functional, and they're actually using, the Ethereum network or other associated networks in order to maintain the security that's afforded by the blockchain in terms of an open ledger application. There's other ones, logistics is a big thing now, tracking commodities, even something like produce or other things that can be, kind of identified and traced by using the blockchain technology. And then, of course, the other applications are social media and entertainment. A great example of a blockchain technology that's being incorporated into an entertainment type of platform or application is one where the user would be purchasing music, let's say, and those funds associated with the purchase by way of smart contract are directed right to the artist or to the manager or however the contract is written, which takes away the requirement for an intermediary, which in this particular case, if you look at some of the other open platforms for music, they're taking the majority of the monies associated with the artists, which isn't necessarily fair. And where the consumer sees that, those implications is when you want to buy a ticket to go and see a concert, and it's $300 or $400 just for a ticket, because the artist wants to get paid, and they're not getting paid by selling their music, so they transfer that revenue stream over to ticket sales.
Wow, that's interesting. And same thing with social media and content creation as well, because there's so many people creating content on a daily basis, and then they get nothing pretty much out of it, but only big companies.
Yeah, and that you can expand on that to talk about intellectual property rights and things of that nature that can be protected by the blockchain. So, you know, someone such as yourself, you can protect your intellectual properties by way of a smart contract. So we're looking at some really fantastic times right now. And things
Absolutely, yes, it's fascinating.
yeah.
Well, let's say that I have a great idea of a startup and I have a great product and a great team, and we decided to launch as an ICO, and we come to you as an advisor. What would be the three most important things to consider when moving forward?
Okay, so I mean, first and foremost, right now, it's my belief that credibility is number one. Okay, this, you know, they talk about this as being a trustless environment because things are managed by way of a smart contract.
Yeah.
However, credibility of the team, credibility of the tech is all first and foremost. And you know, one of the biggest things that I've seen is that one negative connotation associated with the team member can cost the ICO potentially millions of dollars. I would tell you that, you know, giving full consideration to competition, existing competition in the space, potential for market share, potential for mass adoption, should all be within your functionality models and your financial models and your business models. Some applications, it's very easy to do in terms of looking at those things. In others, it's not. Because again, you know, the blockchain technology isn't going to fit with every application. So it's important to understand if you're going to apply your technology to the blockchain, or if your technology is based on the blockchain, how well is it going to do in the future, and how can that be measured? But the biggest thing for me in my forte is looking at a business case or a functionality model that's going to show a return on investment for investors. And that now has become quite complex because oftentimes projects are very reserved in terms of ROI modeling because of legal implications.
Yes, that's actually what I wanted to talk about you next, is how to determine that. What is it? Can you speak a bit about the different token models and how to go about selecting one, and as an incentive for potential investors?
Sure, absolutely. So there's a number of different token models out there right now. Certainly there's a security token. You know, what I would tell you is that there's a benefit there in terms of a security token model, especially when it comes to investor return on investment. However, as I'm sure you already know, there's quite a number of legal implications that go along with having a security token, and it actually will impact the investor at some point in time, whether it be through taxation, capital gains, so on and so forth. A utility token, which is what we're seeing more and more often now in terms of modeling, is something that exists within the ecosystem of the platform or the technology itself. So a good example of that is Filecoin. Filecoin raised one of the largest monies ever raised, I believe it was something like $257 million by selling tokens that only provide users with access to its decentralized cloud storage platform. So outside of the ecosystem, it doesn't necessarily meet the criteria of the Howey test.
Mm-hmm. So can you speak a bit more about the difference between the security and the utility tokens, so that we clarify that for our audience and make sure they fully grasp it?
Sure. So what defines a security token is something that the SEC put forward, and it's called the Howey test. And essentially the Howey test is criteria used to establish whether or not it's a security token or it's a utility token. or a derivative of a utility token, something like a, you know, like a reputation reward or something like that. So, you know, the Howey test is really based on four things. First and foremost, is there an investment of money? Okay, so when they say money, are fiat dollars being converted into a token on a platform whereby it can be taken out of the platform and converted back into fiat dollars? Is there an expectation of profit from the investor? Is the investment of money in the common enterprise? And if any profit does come, does it come by way of a promoter or a third party? So if that right now, as it is today, in the ICO space, is the biggest struggle that project teams are having in terms of how are they defining their token, and how are they developing their token or functionality models to avoid potential Securities Exchange Commission issues, not only in the Western world, but globally. You know, we've seen things like China, Korea, where they've outright banned ICOs for those reasons. They don't really have a litmus test. They've just said, look, it's a security. It doesn't matter what it looks like, and we don't like it. So they've gone ahead and they've banned that.
Well, but then you said that the first thing to consider in the Howey test is if fiat money are invested, but in with ICOs, people are investing with Bitcoins and Ethereum and altcoins. So how, I think I'm a bit lost here. How does an investment with cryptocurrency is viewed as an, and do you get my question?
Yeah, absolutely. And you know, that's where there's a lot of gray area that exists right now. You know, at some point in time, you're going to have to convert fiat into Bitcoin or Ethereum or something like that to make the investment. I would tell you that 99% of the time, projects don't accept fiat currency as a investor instrument. But what I would tell you is it's one of those things where it's a subjective application of the test, and there's no right or wrong other than that of the opinion of a judge at that point in time. So where there still exists a lot of question marks, only time will determine how all of this kind of plays out over the next probably 12 to 18 months.
Well, we will keep track on it, I guess, because it's a very interesting topic. But are there any other type of token models that you would like to mention besides those two basic, the utility token and the security token? Yeah.
Sure. There's what's called a reward or a reputation token. It's where they're given as a marker of reputation or rewards. They specify on the blockchain that somebody did something special, or they are someone special, or something like that. The difference with a reputation reward token is they're not necessarily tradable, like they wouldn't necessarily exist on an exchange. They're not looked at in terms of being liquid or highly valuable. You know, it really, a reputation token is a trusted person bearing it is who they say they are and doing the things that they say that they can do. Then there's asset token. Asset tokens are digital tokens that represent physical assets or a product. So such as Goldmint, they did a digitized tokenization of physical gold holdings for investors to purchase difficult to store physical assets.
That's interesting.
Right. So effectively, they will hold X amount of gold against an investment, and you own part or some of that particular holding. And the last one, you don't necessarily see that often in an ICO. You may see it in seed rounds and things like that, and they're equity tokens. a lot of projects are trying to avoid the creation of an equity token because there's no question about it. It is a security, and it's deemed so by the Securities Exchange Commission.
So maybe we will see more rise of those in the near future when things calm down a little and maybe get more regulated than they are.
For sure. However, projects would have to be careful because oftentimes, you don't want to give up too much equity in your company. And because it's not the same as an IPO in the traditional sense, you don't want to give up controlling shares of your company. And oftentimes in a token distribution, you're looking at, 50, 60, 70% of tokens are going to the community. In an equity environment, that would effectively or potentially give up control of the company to the shareholders or to those who hold the equity.
Yes. Well,
So,
it depends, I guess, on the company decision, and maybe that could be their goal to give out their voting rights to the crowd. Because that would be an interesting model to look at, I guess.
absolutely.
Yeah.
Absolutely.
So for an ICO, once they determine their token model, the next logical thing is to start with the campaign for raising funds. Can you talk a bit about how to determine, first, what is the difference between a soft cap and a hard cap, and how to best determine this number?
Okay, so a soft cap effectively is the amount of money or the minimum amount of money that the project needs to move forward. Oftentimes you'll see things that relate specifically to not meeting a soft cap, whereby any investors at that point would be refunded their tokens or their fiat currency. The hard cap is essentially the maximum amount of money that the ICO would like to raise. In my opinion, I think it should be consistent with the milestones associated with their roadmap for the project. So for example, if at a $10 million raise, they can create A, at 15, they can create A and B, at 20, they can create A, B, and C. That's the way I like to see the hard cap defined. So oftentimes, a project will make an attempt to raise more money than they need. And there needs to be a good and clear explanation of why they're doing that. We're not in the business as investors or advisors to pad people's pockets with money that's not necessary to move forward with the development and implementation of the technology.
Well, it's interesting because what I noticed is that a lot of the ICOs, I don't actually see on their websites any breakdown of how they're going to use the money they're raising. And
yeah, oftentimes you'll find that in the white papers.
Yeah.
There's different levels of explanation. One of the things that I make a point of telling potential investors is make sure that the financials, the milestones, the roadmap all make sense. If there's gaps there, if there's any monies that are meant to be collected where there isn't any defined usage of those funds within the content of the white paper or the website itself, then that to me is a red flag.
So for the soft cap, should people consider fundraising for a prototype, or what should be the milestone associated with this soft cap?
I would tell you, in my opinion, the soft cap should be set at the full development and implementation of the technology. So if you're talking about like a social media platform, your soft cap should be commensurate with the amount of money it's going to take to get that into a full working platform and implemented into the ecosystem or outwardly, if it were.
Okay, so a fully working platform or just an MVP would be enough, or?
I would say a fully working and functional platform. that's ready for the end user.
Okay. And do you think it's a good idea to already have a prototype before launching the ICO?
Absolutely. One of the things that I take the most grief as I do a lot of ICO evaluation work. I am not a fan of concept only. I believe it's pretty cheeky to ask people for money to develop a product. And what it also says to me is that the project team, if they are concept only, they don't actually have any skin in the game.
Let's talk about the pre-sale and what is it, and do all ICOs do it?
Okay, so a pre-sale, for the most part, is meant to generate sufficient funds to move forward with an ICO. So what I would tell you is, if you want to just look at rough numbers, to properly fund an ICO, you're looking at a spend of anywhere from $300,000 to $500,000 US.
Oh, wow.
Which is going to cover your marketing budget, your development budget, all the things associated with bringing an ICO together. And oftentimes what's happening is, if a company already has existing technology in place, if they have alpha, beta versions of their product, they'll offer incentives for investors to participate in a pre-ICO, which will give them a sufficient amount of funds to take it and move forward with their ICO itself. So when I talk about incentives, oftentimes you'll get 10, 15, 20, 30, sometimes as much as 50% on your investment back, and that reward, or that's incentivized so that the ICO team can have a sufficient amount of money to move forward with their ICO itself. It's very expensive to run an ICO, especially for teams who don't necessarily have the internal resources within their project team to fully develop everything that's required for an ICO. So they're going to have to go outward, and they're going to have to retain legal counsel, service providers, people that write smart contracts, so on and so forth. So a pre-ICO effectively is like a seed round of the investment, and it's, in my opinion, meant to fund the ICO itself.
I see. That's interesting. But is the pre-sale also open to the public for individual support, or it's more like reserved for institutional investors?
I would tell you that more often than not, it's available to anyone who wants to participate. However, that being said, oftentimes in a pre-sale, there's a minimum of investment. So some pre-sales may be, we're going to give you a 30% premium on your investment. However, the minimum investment is 100 Ether or 200 Ether or something like that. So in that regard, it's meant more for those who have significant holdings of the things like Ether that are used to buy into the ICO or the pre-ICO, or potentially an institutional investor who has created a pool or a fund from a number of individual investors that they put forward into the pre-ICO.
Okay, I see. Well, then the pre-ICO stage, if I'm getting this right, is for those who still lack the resources to execute the ICO itself, and maybe they don't even have the product fully developed yet. Maybe they don't have a prototype or anything, and they're just creating buzz around it and collecting money to run the actual ICOs. Is that what you're saying?
Yeah, that's right. I would tell you that oftentimes pre-ICO collected funds, if it were, they're not necessarily used for development of a product or anything like that. More often than not, as I'm seeing it anyway, it's meant solely to pay for all of the marketing and all of those things that are going to be of a significant cost moving forward into the ICO. And then once you move into the ICO, the investor incentives are lower, and the minimum investment is significantly lower. Oftentimes, it's identified as, let's say, 0.5 of an ether or something like that would be the minimum investment. So that's where it becomes more available to the masses in that respect. So pre-ICO, in my opinion, is meant to raise enough capital to move forward with the ICO activity itself.
Wonderful. And is there such a thing as running a second or third round of coin offerings after the initial launch? Are there any such cases?
I've seen it happen in terms of tiered token sales, all associated with the same ICO. But I would tell you it's probably a rarity to see an ICO close and then a couple months later it starts up again, and then a couple months later it starts up again. That to me would be a real red flag.
Yeah.
However, if you look at EOS or EOS as an example, the way they've structured their ICO is they only release X amount of tokens per day. I believe it's like 2 million tokens per day over the course of an entire year. So there's a lot of different models, but I would tell you that one ICO is sufficient in my way of thinking.
Well, that's an interesting approach to do it. And what are some potential benefits of that, of releasing a certain amount every month for a year?
I would tell you that it would be such where it would maintain market stability in value. Also, it doesn't create a situation where you have somebody come in and make a purchase that could affect market stability, the integrity of the token, pool of value, things of that nature. You know, if somebody goes in and they buy, let's say, 5% of a total token allocation, they actually could have the potential to manipulate that value of that coin by no other way than the number of tokens that they actually hold.
I see. So maybe an alternative to that is to put a maximum individual cap on the investors. Is this a good practice as well?
I would tell you it's a better practice to have a vesting period for larger investors, whereby there's either like a incremental release of tokens to the larger investors, or there's some sort of promissory built in the contract itself, whereby they're meant to keep those tokens for, let's say, a period of 6 months, 9 months, or a year, or something like that.
Before they can exchange them, you mean?
Yes, before they can trade, sell, or exchange them. And that keeps the market volatility down, so you don't get what's called a pump and dump.
Yeah. Well, so what happens after an ICO raises the money? How are then the tokens distributed, and how do they end up in an exchange for the investors to trade with them? What's the process here?
Well, okay, so the way it works is post ICO, the monies that are raised, and it's very complex. I mean, don't misunderstand. Oftentimes, through a KYC process, there's actually going to be monies that go back to investors because they can't pass a KYC process.
What is the KYC process, if you can say a bit about that?
KYC is what they call Know Your Customer. And effectively what they're looking for is verification of identity. And a lot of projects are keeping that information so that if at any point in time they have issues with securities exchanges or anything like that, they can show that they've actually, it's not an anonymous purchase, it's actually all tracked, and it goes back to the individuals.
Oh, you mean the identity of the investors?
The identity of the investors, yes, absolutely. So the monies that are raised, oftentimes you'll see on a project platform that they raised $30 million, but there's a potential that they'll have to give some of that back. A great example is a project that just closed their ICO early in the year called Kasha. It's a banking platform. I believe of their entire raise, they ended up giving back $14 million. Now, what they're left with at that point in time goes towards, building their team, development of the product, implementation, community relations. There's a whole laundry list of things in terms of how that money is being used and how that money is being spent. And it's important, just to go back, for the investor to have a full understanding of how that money is going to be spent. Because that could potentially be the difference between a successful product launch or product implementation moving forward, or it could be a complete disaster.
So it's important to keep the investors up to date with the developments after
absolutely
the money are raised.
Sorry, go ahead.
Yeah, so I was going to ask how are the tokens distributed to the investors? How do they get a hold to them after the?
Okay, so when you register to invest for Ethereum network based projects, oftentimes you'll have to put in your ERC 20 or 23 compliant token address, and effectively what happens is you make the purchase. And then once the coins are allocated, they're sent directly to you by way of the smart contract and go directly into your Ethereum wallet or your ERC20 wallet.
Because I see on many websites that a call to request for tokens after the sale, the sale is over. So this is where I got confused about it. I thought as well that it should be automatic, but then I see those calls on some websites where it says request your tokens.
Yes, and there's different ways of doing it. Sometimes there's bonuses. Sometimes there's your incentive. If it were, let's say you're getting 30% more because you came in early at the pre-ICO. There may be conditions to that where it's being held for a 6-month period, something like that. So there's many different ways and means of doing the token allocation. More often than not, you'll see the really good projects, they've got it together enough so that all of their investors have their tokens allocated within a certain period of time, and that's made very clear in their white papers.
Interesting. And then when the tokens are issued, do they automatically go into an exchange as well?
No.
Can I trade with them right away, or how does that work?
No, getting an exchange listing is an incredibly difficult thing. The big thing is that quite often it's more the exchange is choosing you as opposed to you choosing the exchange. And the reason why is the exchange will want to see a significant store of value associated with that token before they'll list it, because there is a requirement in terms of trading volume for them to benefit from it in terms of transaction fees. So more often than not, what you'll see is the community will actually create a petition, if it were, to put forward to an exchange to say, look, there's sufficient numbers of token holders here involved. Could you please list this token on our behalf? So it's not just a matter of, oh, hey, let's just assume that it's going to go here, there, or anywhere. It has to be of enough value to that particular exchange for them to list it. Essentially, they need to know that they're going to make money off of it.
So there is a chance that it won't get listed anywhere in this case.
I would tell you that there's different degrees of exchanges. There's large exchanges, Poloniex, Bittrex, Hitbit. You know, these are major exchanges in the North American market. Kraken is another good example. And then of course there's like Yobit and things like that that exist in the Asian markets and so on and so forth. However, there's a number of smaller exchanges that I would tell you will take anybody.
Okay.
However, those smaller exchanges don't necessarily offer the same level of service or security that the larger exchanges. So everybody is jockeying for position here to try and get on one of the major exchanges. And then that way it will create trading volume.
And what about the decentralized exchanges that are not taking any fees? It should be easier to get listed on them, I guess.
So like a peer-to-peer type of
Yes.
exchange?
Yeah.
Yeah. I don't necessarily, if you're trading one token for another, so a good example would be Shapeshift.
Mm-hmm.
They're like a peer-to-peer type of exchange platform. And it's quite simply just trading one token for another. Those types of decentralized exchanges don't have the same trading features as the larger exchanges do. Like, for example, you know, in a couple of the exchanges that I use, I can set up buy orders, sell orders, all those types of things. I can auto sell. All of those different features that come with the larger exchanges are the ones that everybody wants to be a part of, for no other reason other than, you know, it's exposure, right?
Yep.
And it creates a sense of credibility towards not only the technology but the token itself, because it is listed on a major exchange.
Oh, well, yeah, that makes total sense. Well, Doug, very nice talking to you. And as we're coming to a close, would you like to share how you see 2018 to unfold for ICOs?
Okay, sure. You know, one of the, I could go through a number of different things with you. I'm just going to give you kind of the bullet points.
Perfect.
The way I'm seeing the way 2018 will roll out, the blockchain technology is rapidly developing and improving every day, which is fantastic. Smart contract capabilities are improving, and we're going to see development of that with exponential growth over the next year. Investors are getting smarter, which is fantastic, because what's going to happen is the bad projects are going to fail and the scammers are going to fail. Good projects will succeed, because I think what's happening now is the community is starting to create an ICO model, if it were, which gives full consideration to legal implications and all those other things. One of the biggest things for me, and it's my distinct hope, I hope that Bitcoin correlation and market dominance will decrease. Bitcoin goes up, everything follows. Bitcoin goes down, everything crashes. And we saw that earlier in the year in January. I'm hoping that will come to an end fairly soon.
How do you think that this might happen, though?
Well, I'm hoping that if there's I'm hoping that there's a decoupling, if it were, and that as each project comes online, the market will be more distributed, right? Meaning it'll slowly reduce the market cap percentage of Bitcoin.
I see. Well, but then isn't it the same with Ethereum and all most of the ICOs based on the Ethereum network, and it kind of has that correlation as well? So do you think
it does? But for some strange reason, I would tell you that right now everything's tied to the value of Bitcoin, regardless of what network or platform it's coming from or it's existing on. Bitcoin is the gold standard by way of cryptocurrency, and the way it's so volatile, it affects everything under it because it has the lion's share of the market cap right now. And I think as a lot of these projects come online and they build their communities and their store of value and their token increase, it'll offset the effect that Bitcoin has on the entire market as a whole.
Interesting.
ICO standards are developing, which is, I think, a great thing. And I think in 2018, we're going to see a lot of things come forward that will help the project teams navigate all the legal and other implications that they're currently facing now by way of a standardized approach to ICO. But I think the biggest thing right now will be, I believe 2018 will be a year of unprecedented market growth. I think the entire crypto community market capitalization will go to $1.5 to $2 trillion globally.
Oh, wow.
So I think that's the biggest thing for me, is to see that growth, to see that decoupling from the value of Bitcoin, which won't necessarily have the effect that it does today on the altcoins or the tokens. So 2018 is going to be a big year, a big year.
Well, let's see. Sound really fascinating.
Absolutely.
Well, thank you, Doug. If there is anything else that you would like to add, please do so.
You know, the only thing I would add is that if you're an investor and you don't fully understand or appreciate what's involved in cryptocurrency investing, I suggest you do your due diligence, investigate everything, including team members, things of that nature, and don't take any advice from Facebook groups. Please, you're going to lose your money, guaranteed. Okay?
So then my question is, where is a good place to get an advice besides formats like this one and of course major news outlets?
If you're looking for advice and you're looking for advice from industry experts, ICO Bench.
ICO Bench.
Yeah, great platform. I've been associated with that platform for a number of months now. The experts, we all speak openly together on a regular basis, and you'll find honest, objective, and unbiased reviews of projects.
Perfect.
Okay.
Thank you so much.
Thank you. Appreciate it.